Okay, let's welcome on board then our guest for the evening, Vikas Gupta. He's EVP at Arthveda Fund Management and he joins in from Mumbai. Vikas, good evening. Thanks so much for taking time out for us. Let me begin by asking you about the correction that we've seen today. You know, what's your call on the market in the run-up to the budget? Many believe that perhaps, the rally is a bit overdone. Is a correction possible, you think?
Well, I mean, they say buy on rumors, sell on news. So that is that a lot of things have run up. So there is a lot of speculative froth in the market. There's huge expectations from the budget. And on the day of the budget, of course, there'll be huge anything favorable, people will price it even higher. But when the senses come back, of course, there is likely to be a near-term analysis and rationalization, which could end up in a little bit of a downtrend eventually.
Dr. Gupta, your fund, let's talk about that because the performance has been pretty remarkable. Over the last calendar year, your fund has outperformed the benchmark indices by good 8-9%. Tell us which are the calls which you have taken contrary to the market, which have really helped you outperform the market.
See, we go by undervalued strategy. We don't go by the themes. So when we did the undervaluation, what came up, for example, I'll just tell you a couple of names. What came up last year was that Infosys sitting on nearly $5 billion of cash, and net of cash it was valued at something like 10 price to earnings. Okay, so it was extremely cheap. It was in positive cash flows, making a lot of profits, but not the darling of market because of various news flows in the near term. But if you sat down and analyzed it over the long term, it had great opportunity. We didn't know when the catalyst would come, but it has come and we know where it is now. The other thing I would like to talk about, for example, is Hero, which again had a negative news flow because of the Honda split off, and so the loss of R&D capabilities and the market share by Honda. But if you analyze, again, it was a similar story. They're doing very well as far as the fundamentals were concerned. They're sitting on a lot of cash. They had all the opportunity to grow and exports abroad as well. And that also has played out now over that. So these are a couple of examples how undervaluation works out.
What are the sectors you think that will outperform this year and which perhaps look a little undervalued, and which are the ones that look a bit bloated to you?
So the easiest thing for us, if you want to invest, of course, without analyzing, without anything, we will never recommend. But the easiest pick where you have at least a 50% chance of hitting an undervalued stock is the IT segment, according to us. Okay, half the companies at least are significantly undervalued, are sitting on huge cash flows and balances, and the business is doing very well. Majority of them have at least 50% or more exposure to US markets. US economy is doing very well. The dollar is doing very well. So this is a kind of undervalued contrarian play we have. Okay, and it is likely to benefit from another thing which is very difficult to relate to, which is the Make in India. Okay, where overall in the long run your currency has to devalue against the dollar.
Dr. Gupta, leave us with your expectations from the budget from a market standpoint. After all, it's the fund management community which you represent.
From the fund management community viewpoint, we have an expectation that the taxation at the permanent establishment factor, which leads to the fund management getting offshored from India. So there is $500 billion of FI money into India being managed by Indians, but setting out of Singapore, Luxembourg, Mauritius, etc., Hong Kong. Now, all of that or significant portions of that can be brought into India if government gives clarity that foreigners who are investing into India, which is favorable for India, will not be taxed on their capital gains at the likes of 40% if the fund manager happens to be sitting in India. So we are looking at something like, if that happens, you potentially targeting $5 to $6 billion of revenues from pure fund management fees. And this is just the Indian part. Now we just talked in the beginning that we have outperformed. So an Indian fund has outperformed, an Indian fund manager has outperformed more than 10,000 hedge funds across the globe. So that shows that that talent is there in India, but they are sitting from other places and managing not only the Indian FI exposure, the global exposure is also managed, and eventually you can look at a Singapore-like situation here, okay, with thousands of jobs in this industry. Very simple things have to be done.
All right, Dr. Gupta, we'll let you go on that one. Thanks a lot for joining us on the show today, and enjoy your weekend.
Thank you.
All right, let's also get in Sandeep Wagle on the show. He's from Power My Wealth.